August 17th, Thursday, market analysis, Stan Ehrlich. Hi, I usually start with my stock market indexes and the S&P 500, specifically the SPY, covering the Dow Jones DIA and the NASDAQ QQQ, as well as the Russell 2000. And sometimes I'm going to include the E-mini, usually do. And here we go. The daily data chart is for the first time now today, only a few minutes ago, oversold. This is a prime condition for markets to start to go back up again. I'm not saying it's going to start right this minute, right this hour, although it could. I am saying that we are very close in time and price to a turnaround. Now, there's a chance that it could get as low as 432, but I'm not expecting that. That's another 6 points or so lower. Somewhere between where we are right now at 438 and a half and 432, I do expect a rally to begin and to go all the way back up to close, at least at a minimum, the gap that was created a few weeks ago up to 455 and a half. So that would be a very decent, almost 20-point rally, 17 points or so. And I think it's going to take a couple of weeks to do it. Let's see what happens. I'm turning bullish. I'm looking for a buy signal. We have all of the makings except a bullish engulfing buy signal for the spider, and we could have it today, although it seems very unlikely. We're going to go all the way back up to yesterday's high. That would cause a bullish engulfing. But we're low and last at the moment. The 1 minute chart you can see just dropped fairly quickly, about 1.5 points in the last 30 minutes or something. Yep, an hour, a little less than an hour. Now, the DIA, the Dow Jones ETF, is coming down close to support and might reach that, which would mean the spider would drop off a little bit more, which is okay. It's not quite oversold, which it doesn't have to be, but I love it when all of them line up together, and it's pretty rare. So we're also very close to turning back up again, I think, in the DIA. I would draw a parallel for what we're looking at right now to something similar to what we saw maybe on May 25th when we had a low, although it wasn't overbought, it was super close, and we're getting super close, and we have had a decent correction. So very soon, again, maybe at 345.80, give or take a little, 346 and below, we could turn back up. So I am very close to ringing the bell for a new buy signal, but I'm not yet ringing the bell. So watch carefully the next few days. I'm going to start to scream bloody murder, buy it because of the way the market is moving. Technical analysis. Let's look at the Qs, which are very close to turning yellow on the daily data chart, and they are in a support area. We are 27 on the RSI this second, when we've already had a 26.45 RSI low. Remember, this RSI is not your grandma's RSI. This is a customized version, display-wise and calculation-wise. I learned RSI directly from Wells Wilder himself. This is what I like. This is what I've been using for many, many years. And I'm using in the conglomerate, combined with the price action to combine to come up with my ER buy and sell signals, which are the green and red sell signals and buy signals that we get periodically in all of the symbols that I cover, including commodities, of course. So we're close. I'm getting ready to scream bloody murder, buy it. The Qs in support, RSI down to 27, not quite yellow, very close. What about the Russell? Well, the Russell 2000 has actually been oversold for 1, 2, 3, 4 days now. Today is the fourth day. It is in a very, very broad area of previous supporting trading range. Not particularly at a price level I think is important. But what's important about the Russell is it's oversold to the tune of a 14, which is very oversold. When's the last time the Russell got down to 14 on the RSI? Well, the answer is March 13th. And a couple of days later, we started to bottom out. And a couple of days after that, we got the beginning of a very large bottom, which produced a very big move after quite a while. It didn't happen quite as quickly as I would have expected. Did we get down to 14 or anywhere close to that at another point in time? Yeah, well, we got down to something like 21, and the key here is below 25. And that was just before it turned back up again in late December of last year. And again, we got down to these levels of 15 or 16 at the very bottom, which is late September, October of last year. And again, a nice rally for a few days. It wasn't huge. September, early September. And again, not quite close enough, but oversold. Again, you can see anytime it turns yellow, it approaches. And sometimes it's the only day, but usually it's a few. And it's been 4 days already. So I'm getting a lot of indications here that these indexes are about to turn back up. Liking what I'm seeing a lot. Okay, futures, bonds, new low for the whole damn trend, lower than last October. The stock market normally doesn't like higher interest rates, and what's one of the underlying reasons maybe that we're seeing the market drop down somewhat. Hey, that's okay. Now, I didn't expect the bonds to make a new low, but you can't never make the market do what you want it to do. You always have to move with it. So here we are. But it's oversold for the second day now and a little bit below a support area. It's also a prime target to start to move up. And from a longer term standpoint, both the 10-year notes and the bonds, and I'll show 10-year notes in a moment, are ready to have a potential very broad double bottom formation over many months, almost a full year. And that could end up being, should end up being, I think it's going to end up being a major, huge, long-term buying opportunity for many months, if not years. And I think it's right in front of us. And most people don't see it yet because actually it hasn't gone back up yet. Let's see what happens in the next few days to a few weeks. Let's look at the individual charts on my big group here of futures. The E-mini is yellow. It is oversold, and it is a prime target at this point, or maybe a little lower for a short number of days for it to start to turn back up. If I was looking for a buying opportunity, I'd be standing on my tiptoes. Next chart. We got to buy a signal prematurely. It didn't work. There was a small day trader or 2-day loss. We're flat at the moment, but we were oversold, and now we're back down to 26. So we're extremely close to oversold again. We are at a level of support, minor, not that big a deal on the NASDAQ. So there's reasons to believe it could turn up at any moment, but it hasn't started yet. We'll see what happens. Next chart is the sugar, and these are out of order. And I'm sorry to say, I'm going to have to not go the same order that I was doing before. That's kind of strange. Okay, sugar had a rally high this morning, turned around and is now lower on the day, and could be starting to move down to the 20s, like I'm forecasting for weeks now. And it's just been going sideways in a few cent range here. Next chart happens to be coffee. at support, oversold, prime symbol, commodity to turn back up again. I think it's right there, right now, maybe starting to turn back up, or we're very close in time and price. Next, bonds. Here we go, back in schedule. We've already talked about it. And here's the 10-year notes. New low now for a few days. Yellow oversold for 3 days. Prime target to start to turn back up. I do not necessarily end up with a bullish engulfing green bar, but sometimes the market just opens higher the next day and starts to move straight up. And that's what could happen. I won't get a signal, but I'm warning you, when it's yellow, you're either likely to be turning up very soon in time and price, buy signal or not. Next, we got the top of the market in crude oil. It was a week ago. We have a new low since then. It's been coming down great. You realize we almost sold the exact high of the day after the sell signal? I think we missed by 2 ticks. I wanted to go short at 83.70, and the high of that day was 83.81. So I'm sorry, it was 11 ticks. Yeah, very close. Profit on the close, more profit, more profit, more profit. And today is the first day where there's a little rally. Not close to oversold yet. A normal bounce, I'm thinking, in a bear move. Nothing particularly unusual about this. Looking great still so far. Next is heating oil. Got overbought, did turn down like we always expect, and sooner or later it does. We're seeing a rally today, but I didn't get a sell signal on top, sorry to say. But it did stop, and I said so at the time, a week ago, right smack at a resistance area. Next chart. And I'm bearish. I'm looking for lower levels in both crude and heat. So we got a great sell signal a few days ago on natural gas. And we've gone down quite a bit that same day. ER1 got short at approximately 2.74. And we have the first day bounce. We went down very nicely for 2 days. We have a chance still to come back up to that red dot. That would be a new short sale for ER3. It only gets into a trade 1 or 2 or 3 days after the signal. But ER1 is always in the trade the day of the red or green bars. So we're still short from ER1, and we didn't catch an ER3 so far. Next, gold has an oversold condition coming into a general area of support, not quite the exact level, which is down at 1887. So it could slip a little more, but watch this. We have a buy signal today in silver. It's the second one, and I told you a few days ago that those buy and sell green and red signals are not always the highest high for the move, like on that one, like on that one, like on that one, on the bottom, that one. They're sometimes part of the topping out or bottoming out technique or price action. Sometimes they'll build a pattern that's a noticeable head and shoulder, for example, or double top like we have in silver here, and other patterns. But sometimes they're standalone. It's just a reversal day and it turns around like crazy. That's what happened on March 10th. Now it's not the lowest low, which was oversold 2 days ago in support. It's a little bit higher, but we've got a buy signal. All it has to do is stay higher than yesterday's close, and it's going to stay green. If we get down to below yesterday's low, in other words, lower on the day, it will go back to being yellow again. So no signal. But I'm pretty confident that the market's going to stay in this ballpark, maybe even climb some more before the day is over. Next, and it's 11:03. I'm sorry. I started about an hour late today. Very busy earlier. Guess what? We have a buy signal in platinum. So all three precious metals, 2 out of 3, have a buy signal as we are speaking. Now, platinum is not a lot higher on the day, so it could drop to lower easily and turn the green back to white or yellow and not be a green ER buy signal. But it looks like it could hold and even rally some more. And if that's true, we'll have a buy signal at the end of the day and what I hope to be a bottom for the beginning of a nice rally, which I think stands a chance of coming up to, well, I got to say 1,000, and we're currently at 894. That'd be pretty good. Next, copper. Not that it's a precious metal, but here it is, another metal, has another green bullish engulfing. Classic. So that's 3 of my metal markets out of 4. The only one that's missing is gold. And all we have to do in gold is have a rally to higher on the day and it'll turn green. Oh, it also has to get above yesterday's high. So it's got a little bit further to go than that. Next, sideways soybeans. But again, I've been yelling about this critical level of the blue bar that is profound. That support and resistance level goes all the way back to February of 22, way over a year and a half ago. And we came down to that support area from new historic highs with, I will mention, a bearish engulfing ER sell signal almost on the high day, very, very close, and bounced right off of the support level, which I talked about, of course, on the days before and after, like now. It has happened. What do we got? A new high today. We also have the potential of a new high close, which would be nice if it was above all the previous highs for the last week and a half or so. Why is this significant? We bounced off of the horrendously important long-term support area after making new historic highs. This is how a long-term bull market bounces off of support. I got to say that unless I get some kind of a bullish signal, this market could go all the way back up to 14 plus and get into new historic highs at 1440 and keep going. We all know about, the climate change situation. I have no idea what's going to happen, but that's the first thing that comes to mind because it's a crop. So we'll see what happens here. It's already August, so not being a farmer, I don't know at what stage the crop is pretty much set, and you know what you're going to get and what you're not going to get, but maybe it's not set yet. Okay, enough said about the stuff I don't know about, but this looks good. This looks bullish and it's acting bullish. Next chart is soybean oil. Overbought today for the first time in a while. Looks like a shoulder high, but it's getting a little too tall, a little too high. I was willing to accept yesterday's high and it didn't come down, still stayed up there. And now it's starting to ruin actually the balance timing wise and price wise of what should be the right point in time and the right price levels approximately for a shoulder. It's not. It's a little too high unless all of a sudden today it reverses completely and drops below yesterday's low, then I would get a red bearish engulfing sell signal and I would be switching my story. But right now I can't. It's up, it's strong, it's made a new high, it's coming close to previous tops. I got to start talking about being neutral to bullish next. And it doesn't match up with the other grains very well. Soybeans, yeah. And that was corn, okay. But soybean meal, or was that soybean oil? That was bean oil. That's right, bean oil. Meal is somewhat the opposite. So we're making new lows. We're not yet oversold. I don't see any turn to the upside at this point, but we are approaching some support. So I'm getting conflicting signals on some of these grains or grain byproducts at this point. What about corn? oversold for 2 days, and it is starting to come up a little bit. Now it has to get above, I'd say 477 and stay there and close above it. I'll say 80, 480. That'll start looking a lot better. But we're 73 right now, so we're close. But I think we're going to get a little rally, maybe up to 503. I can't help it. I'm bearish on corn because we've seen lower lows again and again over month to month to month. And even a new high for quite a while got crushed and didn't hold up. So I have to continue to be bearish with a minor short-term rally starting now. But the trend is down, and I see no major bottom. The only thing that looks interesting from a long-term basis is the fact that it came down to the lows made back in July, last summer. Otherwise, I can't really turn bullish. Next. Pretty much the same commentary on wheat, but here's a little bit different story. Wheat is very, very low from a historical standpoint, very low. In fact, you've got to go all the way back to 2019, 3 or 4 years ago, May 6th, to find these same price levels. Now, the war obviously caused the wheat market to scream higher. We got a sell signal in the high day. Great. Impossible to pick off the top when you're going limit up bid 6 days in a row. No, we did it. The system did it. And I'm real proud of that one. It's probably going to stand as the highest high in wheat for many, many years to come. But we're now down to those lows for years, and we're oversold. Historical major support. If I get a buy signal in the next few days, I'm going to talk about wheat being the bottom for many months to come. I won't get a long-term buy signal until we start closing back up above 770, actually above 780, which is quite a ways higher, but it wouldn't take but a few weeks to do that. I would not go short. That's for sure. Next chart. Cattle. We got the top of the market coming down nicely. New low close appears since the sell signal at the top. The rallies that we had failed. I stuck to my guns and was maintaining a short opinion. Here we are, new low ground. I like what I see. I think we're going to come down maybe to 170-ish, 172. Next chart, hogs. Coming down some more. A little rally today. No big deal. Still looking for support, a test of support probably at 75. So from this price, modestly bearish. But the long-term trend is down, so that 75 may not hold. We'll see what happens when we get there. Next chart. Overbought conditions, new high for the move, coming down dramatically, almost a new bearish red sell signal after an upside, what may go down in history as an upside exhaustion gap. This is a very big price range. This could end up being a whopper of a sell signal if it just gets below yesterday's lows. Right now, it looks bearish. Overbought, got up to a pretty damn high overbought level at 86. Reversing, the only thing I'm missing is getting below yesterday's low, and it might happen before the close, and tomorrow I'll be screaming bloody murder if it turns red today. Next, we got one, huge bearish in the cocoa market, worked great the next day. We're rallying a little bit more than I thought appropriate. I'm not too worried yet about the longer term down move. So I'm going to say neutral momentarily, expecting to start coming down very soon. Next, our overbought in resistance created a little double top. We have a new low since then. We almost have a minor downside breakout over a few weeks. I'm looking for a move down to probably the high 70s very soon. I'm liking what I'm seeing. I'm bearish. Next, sold the top, have 3 sell signals at the top area in the E-mini, which is now, like I started out earlier, in oversold condition and about ready to start to turn back up. And that's it, ladies and gentlemen. You have a great day. Thank you.